Arvind Meyaram, he's the DA Secretary. He joins us from New Delhi. Mr. Meyaram, good morning. Thank you for joining us. Mr. Meyaram, this is something which I'm sure will be comforting you, that Indian markets are nearing an all-time high and global investors are of the view that in the near term they want to park money into Indian equities.
The foreign investors are believing that India is growing well and that the steps that the government is taking and the promise of the reforms that are to come is credible, and therefore they are putting their money in the Indian economy.
Mr. Meyaram, so as far as headwinds for economy are concerned, do you believe the worst is behind us?
It is very difficult to say that the worst is behind us, although we do believe that with the changes that we see in, for instance, the US economy, the global factors which have been impacting adversely the Indian economy perhaps will not be as severe as they have been in the last year. From that perspective, I do believe that we have much of the headwinds that were stopping us or stalling the Indian economy from going ahead are behind us. However, we need to continue to look carefully at the Eurozone, and we hope that they are able to get their act together. And therefore, once the global economy begins to move, our own story is quite intact. So I do not believe we would have any problem with that.
But Mr. Meyaram, are you disappointed that S&P did not buy into the finance minister pitch for a ratings upgrade? In fact, they are still bearish on Indian economy.
If you look at it carefully, they have said what are the positives of Indian economy. And the first positive of Indian economy they have spoken of is that the growth is high, which means that even in the worst year, which was the last year of India's economy, the growth was 5%. For the current fiscal, S&P itself has projected 6%. So therefore, they believe, one, that India's growth is high, 5% by any standards globally for the last year is high. And it is going to be 6 this year, therefore we are continuing to be on the growth path. So this is what they have actually acknowledged. And the second thing that they have acknowledged in the report is that the government has actually taken steps to regain the fiscal space. And on that account, the fact that in the last year, when the finance minister had said that fiscal deficit will be 5.3% and the 31st initial numbers on 31st March was a little less than 5.3, we believe it might even go to 5.2. Or less than 5.2. So therefore the numbers are credible, and S&P has acknowledged that. So if you look at these two facts, one, very strong decisions have been taken to get the economy back, to get the fiscal space back, and second, the growth is high and will continue to be high. I think these are two very important factors. Now look at what they have said to the negative part of it. In the negative, they have said fiscal deficit is high. Well, it's acknowledged it is high, and we have acknowledged it is high. There is a fiscal consolidation roadmap which has been given by the finance minister. We are confident and absolutely certain that that fiscal consolidation roadmap will be fully adhered to. And therefore, we have already stated that our fiscal deficit in 16-17 is going to be 5.3%. So therefore, we have already, 3%. So we are already moving in that direction.
The ratings agency, Mr. Meyaram, has said that there are chances of an upgrade if reforms are unleashed. Will that be possible given the poll or rather political standoff New Delhi has witnessed?
No, but you should look at it in two ways again. One is, what are the reforms which are stuck in? So are those make or break reforms? To my mind, they are not make or break reforms in the sense that they are important. Government is very keen that they go through. But obviously, they are not the ones which are going to stall all reform processes in the country. In fact, if you look at reforms, large part of reforms are in the executive space. They are through policy, and the policy does not have to be endorsed by the parliament. So to that extent, the reform process is continuing steadily. And there is a reform across the board. Look at, for instance, the establishment of coal regulator. Look at the announcement for setting up of a railway tariff regulator. There is a road sector regulator. There is a progress happening in these at a very rapid pace. In the next 2 or 3 months, you will see all these coming out into the public space. So I believe that the reforms are moving, and even if there are some laws which have not been amended in the parliament, it does not mean that the overall reform process has come to a standstill. So there again, I believe that this concern is overstated.
Mr. Mehram, CAD, current account deficit, that remains a big concern. The big worry is that gold imports have surged. What kind of steps should be expected from the finance ministry in order to bridge the CAD now?
Gold imports, if you look at overall gold imports in the last year, in quantity and in value, they were less than what it was the previous year. And therefore, if you look at only numbers of 1 month, I think it is unrealistic to make any projections on that account. But the fact also remains that now that if once the economy is beginning to move, if this year we are saying 6% plus growth will happen, and inflation is coming down, and we are also going to be launching very shortly inflation indexed bonds, there will be adequate number of other opportunities for people to invest in, which will then possibly bring the pressure on gold down. And therefore, I do not foresee that there is going to be similar kind of surge which you've seen in 1 month in the months to come on a continuous basis.
Right, so gold imports have jumped on the back of lower commodity prices. Trade deficit has jumped significantly. Are you worried more than before right now?
No, I've said that exports are also growing since January. If you see, there is a growth in exports. Our diversification is also more comfortable now than it used to be earlier in terms of the commodities as well as direction of exports. But CAD continues to be a worry for us. I think it would be naive to say it is not a worry. We do believe that there is a bigger case for trying to convince people to buy less gold. But at the same time, I do believe that in this current year, we should have a much better grip on the current account deficit than we had in the last year.
So, Mr. Mehram, where do you see CAD by the end of this fiscal then?
Once again, I think it would be a fool's task to predict numbers as early as in May for the entire year. And but let us look at the numbers as the year goes by. But I'm quite sure that it will be much less.
Right, and ratings agencies are often accused of working with a herd mentality. Are you wary that Moody's and Fitch may also follow S&P's bearish assessment?
I don't think any credit rating agency would like to be dubbed as following another credit rating agency. If that was so, then you wouldn't require 3 or 4 of them, would you? So I doubt that that would happen. I think other credit rating agencies will look at the ratings differently. Recently, when we had a discussion with the Moody's and we raised the issue of methodology, in fact, I must, to their credit, say this, that they admitted that they were also looking at their methodology, because they did find that the methodology, some parts of the methodology that they used were reaching them to conclusions which obviously were not keeping in line with what they were seeing. So each credit rating agency will look at the Indian numbers independently, and we do not believe that one will impact the other.
But so the broad message from S&P was that 1 in 3 chances of a downgrade, they still exist. If pace of reform slows down, given the political stalemate, isn't that a high risk? 1:3 is still 33%.
What would be the difference if it was 1 in 4? or if it was 1 in 2, or it was 1 in 5. It is either downgrade or it's no downgrade, right? So in some manners, I believe it is either 100% or nothing. So if they say 1 in 3, it's like saying, a person is going to live for 30 days more or 60 days more. What kind of prediction is that? So I don't believe that we have any case for downgrade in any manner. And I'm quite sure that next time the Standard & Poor come, they would have a much better appreciation of what the Indian numbers are.
Right. Inflation, Mr. Mairam, has come down. IIP has improved. Where do you expect the final growth figure for FY13?
Once again, let me say this. If it's 5%, it's for the last year. If it's for 5.3%, it's again for the last year. We are not looking back. We are looking ahead. For this year, the most pessimistic number we have heard till now is from the RBI, which is 5.8%. Most other, including S&P, which says 1 in 3 downgrade possibilities and so on, have said 6%. In the economic survey, we said it is going to be anywhere between 6.1 and 7. Now, I think that's more realistic in terms of the uncertainties that happen. But certainly we are not looking less than 6.1%. My personal assessment is, and I would take that risk, is that we should not be less than 6.3% or 6.4% as things happen. But as I mentioned earlier, as Finance Minister has also said earlier, we'd be quite happy even if it is 6 or above 6, because we are certainly looking at a more nuanced growth, but reaching to a potential growth rate of 8% in the next 2 years or 3 years. And I think that would be comfortable.
Right. Inflation has moderated significantly. Does that now set the tone for Reserve Bank of India to consider another rate cut in the June monetary policy?
I would certainly urge you and recommend you to go and ask this question from the governor, because we cannot certainly advise the Reserve Bank of India on what they should do with the interest rates. But the governor himself has recently said in Germany, if you have heard his statement, that he's happy with the inflation numbers, and he will certainly take this into account when he does the next policy. So we're quite hopeful that the numbers would be encouraging and they would be positively looked at.
So by when do you expect the decision on the revision of FDI caps? Have the issues pertaining to definition of control been laid to rest?
No, on our FDI side, both the Prime Minister and the Finance Minister have said that we need to have a relook. And DIPP is certainly the agency which is looking at the FDI caps and FDI policy in a comprehensive manner. The limited task which is assigned to the committee which I chair is to clean up the definitions of FII and FDI investments, because there is a lot of confusion on that count, and I think that we are aiming to be able to bring out our recommendations to the government sometime by the middle of June, and then of course it's for the government to take a call on that.